Welcome back to the Gold Newsletter channel, and welcome back to our studio here in Vancouver. My name is Kai Hoffmann. I'm the @JR Mining Guy on Twitter, also the CEO of the SOAR Financial Group, and we have a company introduction lined up for you today. And I'm joined by Shawn Khunkhun. He's president and CEO over at Dolly Varden Silver. Really looking forward to this conversation. A lot of hype around the company. Let's get to the bottom of it. Why is that? I'm sure there's good reason why you're also trading at 180 million market cap. So time to learn more. Shawn, thanks for making it to the studio. Thanks so much for joining me.
Thanks for having me.
Absolutely. Yeah, Shawn, let's start with a bit of an introduction.
Sure.
Every company has to go through that. 60 seconds. Who's Dolly Varden and what are you guys up to?
Okay, so Dolly Varden is in the heart of the Golden Triangle. We've got a 64 million ounce silver resource and 1 million ounces of gold in all categories. We express it as a silver equivalent of 140 million ounces of high-grade silver EQ. So we're in the Golden Triangle. The project hosts 2 past-producing mines. The Dolly Varden silver mine was the richest silver mine in the British Empire. The Torbrit mine was Canada's 3rd largest silver mine. So it's a rich history. It's in a prolific mining camp, and the company's been significantly expanding the project with new discoveries recently.
When did you join that company?
So today is the 14th of February. So in
Happy Valentine's Day, by the way.
You too. It's actually interesting. The company went public on February 13th, 2012. Okay, which was the same day my daughter was born.
No way.
Mm-hmm. And I came into the company 8 years later. And so it was February 16th, 2020. So it'll be my 4-year anniversary at Dolly Varden in a couple of days.
Oh, fantastic.
Yeah.
Yeah. Didn't know it's been 4 years already.
It has, yeah.
It feels like you just joined 2 weeks ago. It's
no,
crazy.
It feels like 4 years, kind of.
Right? It does feel like, well, when we first met, you had black hair.
That's right.
So, absolutely. No, I appreciate that, the intro. Second question I always like to ask is cap structure. We got to run through that just so everybody's on the same level playing field. Mm-hmm. Run us through that. Who are some of your biggest shareholders? How much cash do you have?
Sure. So there's 2 corporate shareholders that own roughly 37% of the company. So 30, over a third of the company is in the hands of Fury Gold Mines and Hecla Mining. And then there's about, I'm going to just round up to say 50% in the hands of institutional investors. And those institutions include Fidelity, mm-hmm. that on overall is a 7.5% shareholder, so quite a large shareholder. And then other notable institutions include U.S. Global, Sprott, Delbrook, and there's a whole host of other institutions that own 47.5% of the company. Eric Sprott is hovering around 9.9%. Mm-hmm. So it leaves about 7% in the hands of the public. So with 270 million shares issued and outstanding, you've got a public float of about 25 million shares. The company currently has about $9.5 million in the treasury. Those are all hard dollars. And yeah.
All hard dollars and interesting. Factoid. Right, because it's hard to come by hard cash. Flow through is easier. Charity flow through even more so, but hard cash is hard to come by. I think we need to talk about in a minute, like how are you planning to spend that, of course, as well. Any warrants, options that are creating an overhang? Anything we need to be worried about?
So no warrants, and then options are about 4% of the issued and outstanding, and they're to management. So any of those management would be insiders. And I want to say the average strike price is probably close to 70 cents a share, which is exactly where we're trading. So no overhang.
No overhang, really. Yeah. Okay, no, fair enough.
And no debt.
No, okay. Let's start with the business plan, I think, is a really good starting point, and we'll talk about exploration plans for 2024 after that. But what are you planning to achieve? What's the size of the prize is also sort of the question I like to ask there as well. Like, what's the end goal for you, Shawn?
So for me, like, what possesses somebody to take over a junior mining company when you're not the founder? And so what I saw was a company 4 years ago that was trading on a in situ basis of about 37 cents per silver ounce in the ground. And what attracted me to the opportunity was I saw Homestake Ridge, this 1 million ounce gold deposit, 20 million ounces of silver next to, 44 million ounces of silver. And then I saw Hecla Mining. And Hecla had gone hostile on the company in the past, and Hecla was a 10% shareholder. So my thinking was, and it's not a unique idea. My idea was consolidation. You know, you look at what Agnico is doing in the Abitibi, you look at what other major mining companies are doing in various camps around the world. I thought, you know, you got these three entities, we need one ownership structure. And so what I did is I got very, very lucky. You know, so much in our business is on the back of just good timing or, you know, in great endowed projects. And I had the luxury of both. And so we caught a silver wave in year one. I put $27 million into the treasury on the back of that silver wave. And I used that money to consolidate the area by buying Homestake Ridge. There was a cash component, $5 million cash component, and we issued about a third of the company in terms of equity. But the reason it was such an accretive deal and our shareholders voted 99% in favor of it was we were essentially buying, if you look at the mineral inventory, 2/3 of it were up at Homestake. So what I'm trying to accomplish here, Kai, is I've got an area that's a highly prospective area, and there's a lot of opportunities with glaciers receding. There's lots of opportunities of economies of scale by bringing assets together under one banner. I'm also trying to grow and expand those discoveries. Like I look at, you know, there was a panel at the recent VRIC conference where you had people like David Garofalo and Alistair Still and E.B. Tucker and others who got up on stage and talked about the gold industry. And one of my takeaways, one of the reminders that I got from that conversation was you look at a company like Newmont and you look at their annual production, whether it was 10 years ago, 20 years ago, it stayed relatively flat. However, their share structure is totally blown out. You know, first it was the deal with Gold Corp, and then most recently was the deal with Newcrest. And my point here is, I think the business model that I have is silver is something that we don't focus on because it's hard to get, because it's normally thrown off as a byproduct. I think something like 72% of the world's silver comes as a byproduct. So what I was on the hunt for was I thought we were entering a new bull precious metals market. And my experience from the last cycle was silver outperformed in the ninth inning. And so my thinking was if I could get myself exposure to a high-grade silver asset, and what I was hoping for was something outside of Mexico. And the reason I thought that was because Mexico's the world's #1 silver producer. And if you're looking for silver exposure, Kai, and there's 20 companies you can invest in and 17 of them are in Mexico, you're taking on country risk. And so my thinking was find something. And so when I came across Dolly, it was sitting there. It was half the value of its peers. You had Hecla, you had Homestake. And what we've done is we've brought Homestake into it. We've had Hecla increase their ownership interest from 10% to 15%. And the next phase is how big is this project? Like we could probably strap a really compelling mining plan around the current resource. You know, at a very, very high level, if you take 140 million ounces and you say, you know, let's be really conservative and say, you know, or you're only going to mine half of it, right? You could talk about a project that'll go on for the next 15 years and produce 5.5 million ounces of silver a year, and it'll, because of the grade, be at the lowest cost quartile, and it's in a safe mining jurisdiction that you can permit mines. But that's not my business strategy. My business strategy is, with the drill bit, let's step out and see if we can grow it. Can we double the resource? Can we add 50% to the resource? And you look at the recent results that we've had from Homestake, where we stepped out and we just hit 12.5 meters of 79 grams of gold. And on the silver side down at Wolf, we're stepping out 200 meters and we're hitting 30 meters of 461 silver equivalent. There's a lot of expansion potential. So I feel like we're adding tens of millions of ounces of silver. We're adding gold, and the big boys aren't. So at some point, so judge us on what we've done. So I've come in, I've raised $75 million with Hecla, with institutions like Fidelity, with people like Eric Sprott. We've been very disciplined when we raise money, always try to raise money when we have it, so we're not leading ourselves to be vulnerable. So we've raised a lot of money at a time where it's been difficult. We've done it thoughtfully. We've done it without warrants. And we've added to the mineral inventory through acquisitions. We've made discoveries. But ultimately, if you look at us, we're no longer trading at 37 cents an ounce in the ground. We're trading at $1 an ounce in the ground. And we are now multiplying that ounce count by an additional 100 million ounces of silver. So that's where we bring that floor of value under the market cap. The shareholders are backed up by that mineral inventory. They're backed up by the treasury. They're backed up by the shareholders. But the future is, in a bull market, these things have previously traded at $3.50 an ounce in the ground. What did $3.50 buy you in 2010? It doesn't buy you that in 2024. So I would argue the next bull market, these ounces are going to trade at a higher value. You look at the rhetoric that's coming out of the world's largest silver producer today, it's not good. So I think these ounces should trade at an even greater premium. And we've got an acquisitive corporate investor. You spend a lot of time in the Yukon, right? Hecla has been very active with Keno Hill, with purchasing Attack. We are in the right location, and I've built a great team. So I think this is a deal that transacts in the future or leverages its market cap to become a prominent silver company.
Let's break that down. You mentioned a lot of things I want to follow up on. Getting interesting for Hecla, I think is probably the underlying theme of all of my following questions here. You're sitting already at 140 million silver equivalent ounces. Yeah. Where do you think it starts to get interesting for Hecla? And how are you planning to get there? You have 10 million in cash. Is that enough? And what are the plans? So I know it's a bigger question. Mm-hmm. So plans to get to that goal.
Yeah. So I think where it started to get interesting for Hecla was the fact that it's silver and it's in Canada. Step one. It was interesting enough for them to try to acquire the company when it was a fraction the size. Now it was also a fraction the price. So, I can't put myself at the helm of another company because there's so many other things that you have to factor in terms of what do your shareholders want, what are other opportunities are out there. And so I can't focus on that. What I have to focus on is making a saleable product. Okay, so what does a saleable product look like in this part of the world? And so when I first came in, I asked my engineers and my geologists, this new team that I populated around me at the advisor level, people like Ryan Waymark, people like Rob McLeod, people like Michael Henriksen, who were, they were at the Newmonts and they've sold companies in the past. And I said, okay, guys, what do we need to do here? And they said this through the lens of $16 silver back in early 2020. And they said this through the lens of a 44 million ounce resource at 300 grams per ton. They said, okay, you have to do two things. You either have to double the size of the resource or you have to double the grade to make it economic at $16 silver. So I thought, okay, that's going to take some time and some luck with the drill bit. So I bought Homestake Ridge. So we essentially more than doubled the resource. And so we accomplished that goal that they set out for me. So from a perspective economies of scale, the industry likes to say you get to 100 million ounces. That's a pretty interesting start to start looking at the economics and start looking. So Kai, to answer your question, I think we're there. But why do I keep going with the drill bit? It's because I think the greatest value creation I can make for my shareholders is to continue to grow the deposit.
Now, I'm curious because I keep coming back to a gold-silver ratio as well. And you say, okay, let's assume 100 million ounces silver equivalent. And the gold-silver ratio right now is about 90, right? So I always like to break that down and compare it because for me as an investor, okay, trying to compare deposits, production sizes, where does that rank? Because originally you said 15-year mine life, but that brings me to 50,000 ounces gold equivalent maybe, probably, roughly. My math might be off by 5,000 ounces or so. But how interesting is that? Like for a Hecla, that's the main question. Like if you're a major or a mid-tier producer, 50,000 ounces gold doesn't move the needle, right? So 100,000, 150,000 ounces. That moves the needle. That's why I'm sort of asking.
I guess the way my brain looks at it is like this. So if we look at it for the heads-up numbers, so there's 64 million ounces of silver, right? And there's 1 million ounces of gold. And remember, I just conservatively, arbitrarily said, let's cut off half the deposit and just assume we can't mine it for, being...
my whole point is like the size. Where does it really get interesting for a hectare, right? If you were to translate it into gold equivalent ounces, is it 100,000 ounces, 150?
Again,
on the silver side, is that 12 million ounces a year? Like, where it's beefy enough to... Because they need to make a $180 million acquisition, plus a premium, and they need to build a thing. Mm-hmm. All right, so I'm wondering, okay, when is it really worth opening the spreadsheets and looking at it?
And I don't want to be so Hecla-centric here, so let's look at...
No, or we can actually generalize that.
Let's generalize. Right? So I know another very acquisitive gold company, very acquisitive. They've been one of the most active in the space in recent years. And when they evaluate opportunities is, so they'll look at a project like this, right? And they'll say, okay, this is probably going to be about a $200 million build. Do we think that there's enough metal in the ground to pay back that build? Okay. And so someone would go, well, why would they invest $200 million only to make $200 million? Well, the point comes in. This is where the key point is. If they believe there's exploration upside. So for me, when I look at this project, and I'm looking at it through the most conservative lens possible, I see a project where I believe there's enough metal in the ground to move it forward, but that's not what makes it interesting. What makes it interesting is starting to drill in between deposits and making discoveries. And so the more difficult question we're going to have to ask ourselves as shareholders and management is, what is the right value we put on this company? Like, what would the right premium be that would represent what we believe the exploration upside is? And actually, I think, Kai, and this is a question you should ask CEOs that come on your program, and I don't know if they'd give you an honest answer, but after being in the industry for 20 years, I'm shocked by how many CEOs don't know what their company's worth. Mm-hmm. Okay? And with all else being equal, and with, I have an idea of where I value this company and what I would sell it for today, right? And so, again, and this is the other part of the whole thing about, looking at the gold and silver ratio and all this.
I was just trying to simplify it.
No, because I think this is the beauty of markets, because I think for a lot of investors, like a lot of people would look at this project and go, yeah, on a gold equivalent basis, it's interesting, right? But I view it through the lens it is, which it's the 64 million ounces of silver and the 1 million ounces of gold. I grew up and lived through a time where the silver to gold ratio was closer to 50 to 1 than 100 to 1. And in bull markets saw it go to like 30 to 1. And read about and studied bull markets where it went to 15 to 1, right? And so my thinking is, I love everybody who looks at this project in a gold equivalent, because I don't think it's an if, I think it's a when that ratio turns, we're going to get a re-rating on that. And but I don't even think we need it. And again, like if I was all about mineral inventory and all about in situ value per ounce, I'd do something very simple today. I would take our 150 gram per ton cutoff grade and I'd drop it to 75, and the ounce count would go through the roof, right? And I'm not doing that because I don't believe in a 3-year trailing price environment of, call it $19, $20 silver, that would be economic. Okay? And so what I hand over heart, when I look at our project, I want to focus on grade. I want to build out grade. And it's why I didn't come out and announce 60 meters of 15 grams of gold. We presented our results in a way, and actually even went back to the assay lab when we got 1405 gold and said, we want a more rigorous test, and dropped the grade from 1405 to 1335 because we want to be conservative, and when we can, we put out true widths. When we know what they are, we estimate them. And so I believe what we're doing at Dolly Varden is if we were uberly promotional and if we were uberly hyped, we would be a lot more aggressive in the way we approach this on a technical basis. But if you look at our press releases, they're awful because they're like 12 or 15 pages of lots of sections,
a lot of data,
and lots
of
datas, but we want. It's important, I think, to be uber transparent in this business, because one of my friends describes this as online dating. Right?
Yeah.
And we don't want to catfish anyone. We want people to know.
We want people to swipe right?
Yeah. Yeah.
Gotcha. Okay. Couple follow-up questions, of course, to that. 10 million in cash, or 9.5 in cash, roughly. How are you planning to spend that money, and how are you planning to prove up that exploration potential that Hecla might be looking for? Like, what's the goal there for this upcoming season?
So we just put out a whack of drill results. Like, we put out, 24 holes in mid-January, another 50 holes 2 days ago. So what I've got the team doing right now is we're having a healthy dialogue internally of ranking targets, right, and coming up with a plan. And then we'll present that plan to our internal technical committee, which includes Hecla's VPX, Kurt Allen, and then we'll publish our plan. And essentially, where I think we're going to go when we conclude this plan here in the coming weeks is we'll go back to Homestake, we'll go back to the Torbrit Wolf Horizon, and we'll continue to focus on big emphasis on expanding and extending these deposits. For example, we just had a step out hole at Homestake Silver, trending to the north. It was on section a 50-meter step out where we just hit 12.5 meters of 80 grams of gold. We need to follow up on that. And where that is projecting is it's projecting right below Homestake Main, which is the gold dominant deposit on the property. So it's following up on the success that we've had. And yeah.
Okay. No, fantastic. Okay. But you haven't announced like a drill program or anything yet? Like X amount of meters?
We haven't
yet. It's a bit early for that.
Because what we do is we just put out 48 drill holes, and we've just plotted those into with all the historic drilling. Like, we've done 100,000 meters of drilling since our last 43-101, and now we're doing all the modeling, the deposit modeling, the target ranking, and then the other thing I have to say is we acquired 100% interest of a target called Big Bulk. Mm-hmm. It is a fertile copper gold porphyry that we think is the feeder of all the mineralization in the district, and we want to allocate like 5% of our budget there as well. So again, we'll be putting out our detailed plans in the coming weeks, and moving forward with a drill program.
Fantastic, awesome. Okay, I have one last question. I couldn't fit it in earlier. You mentioned Fury Gold holds 22%,
yeah.
And we all know the market sentiment is what it is right now. A lot of juniors are cash strapped. Selling shares is a way to generate income for companies. Yes. Are you worried about that at all with Fury? I'm just wondering if there's a lid. Should we be worried about selling at all? Is that something they've mentioned to you, or I don't know? I'm just fishing a bit for an answer here, but it is a little worry for me. So
I just want to. I think it's really important because you mentioned earlier overhang when it came to warrants and options. And when I first did the deal with Fury, there was some out there in the community that said, hey, could this be an overhang? Like, you've got a peer that is a large shareholder. And I think what we've demonstrated over the last 2 years that Fury has been a shareholder is they've sold stock once. And the one time they sold stock was because we brought in an institutional investor that came in and took 7.5% of the company. And so I think what we've demonstrated is when we need to bring in new partners, they've played ball. Fury's market cap is somewhere in the neighborhood of about $70 million. They've got about $50 million worth of Dolly Varden equity. So the majority of their market cap is made up of DV stock. They've got some cash, I think somewhere in the neighborhood of, $10 million or so. So their enterprise value on their assets is $10 million. So the market is saying, to me, the way I read it is, the Fury shareholders, some of them are there because of their exposure to Dolly Varden. And I guess my point to you is, they're a 22% shareholder right now. I can envision a future where maybe they're at 19.9 if it's strategic for us to, bring in a new shareholder or increase an existing shareholder's interest. So they've played ball, but what the message I've got, and we've got a 6-person board. 2 of our board members are from Fury. Yeah. And so I'm convinced that they want to be here for the big re-rating, the big takeover, the big sale, and want to own as much stock as they possibly can when that happens.
Perfect, Shawn. I think that was a really comprehensive overview as well. But as shareholders, we're always greedy, as retail investors in particular. What's the next news? What's the next news release going to be? What are some of the next catalysts? Let's put a bow around your next steps here.
Yeah. So I think, look, we're always working on different initiatives at Dolly Varden, whether it's, again, a big significant milestone for me was Hecla increasing their stake in the company from 10% to 15%. So we can't, and again, the Homestake transaction these are items that occur in the boardroom, not in the field. So I can't underestimate or undermine the amount of efforts we make on the business development side. So, we've signed a lot of CAs, we're talking to a lot of investors, and convincing a new institution or corporate or investor to come in sometimes is the catalyst for the share price moving. So I can't underestimate that. But I really think the drill planning and the initiating of the program to follow up on the success we had in 23 is going to be one of many other catalysts.
Fantastic. Awesome. Shawn, thank you so much for making the time. Thanks so much for stopping by the studio here. And everybody else, thank you so much for tuning in. I hope you enjoyed this interview here with Shawn Khunkhun of Dolly Varden. If you have any questions, leave them down below. And if you haven't done so, hit that subscribe button, hit that like button as well. Especially that like button tells us we've brought the right company on, if you like the company, and if we should bring them back on as well, of course. Thank you so much for tuning in. We'll be back with lots more.